Alright, starting from a daily chart, this is going into Wednesday, May 20th. If we look at the daily chart, obviously one of the discount rays of interest coming inside of the week was the weekly fair value gap. So far, price has traded into it and has found, currently on the lower time frames, a rejection from it. Right, you can see that there's a wick forming at these levels. So what are some premium targets? Okay, if this is enough to send prices higher, okay, this doesn't mean that price will make all-time high. Okay, maybe it simply returns back in the range and consolidates. The interest is obviously for the day of Wednesday. On the daily chart here, there's a volume imbalance, okay, cutting through a bearish order block here. So this can be a low-hanging fruit target in case today's day is an open low high close profile. So this is a good low-hanging fruit for a premium array. If not, we have the current weekly high. Sorry, right, the high of Monday. How much of a right? It's not even 2,000 ticks. So if today will be an expansion day, I think that it's very possible it comes here. There's a small fair value gap at these levels, right? So low-hanging fruit, this, right, the volume imbalance, the new week opening gap essentially, and in case of an expansion profile today, right, obviously the high of Monday. Now in terms of discount, right, say today, rejects from these levels and starts trading lower, right? Well, next period of interest, in my opinion, then would be the daily fair value gap that resides around, right in between 25% and 50% of the weekly fair value gap, right? So essentially the low here of Friday. This would be a good target in case of an open high-low close profile today. If we look on the 4-hour, this level is from 2 weeks ago, right? The level of interest for this week is the order block, right? That sits right at 50% of the previous week's range. In fact, well, you can see how this week so far has been very high resistance because price is trading around, right? The range is pretty tight here between the range of a discount order block and premium order block. But, right, you can see so far the discount levels are still being held. Right, Monday opens, trades to the high of the order block. Then Monday trade twice to 25% of it. Tuesday also consolidates around 25% of it. Eventually has a shakeout, right, under the previous week's low. Still respecting overall 50% of the order block, right? And now at the open, price trade inside 25% of that order block. Okay, so can this be enough to send prices higher? Again, it doesn't need to make new all-time highs, but it can come to the high of Monday, right, or inside the wick of Monday around 50% of the 4-hour order block. This is the premium order block. Right, that would be a range of around over 1,000 ticks, right? Even in case, say, of a reversal day today, okay, either through an SMT inside of the range, some kind of divergence with a daily high, price comes back, respects the order block, and then reverses. Right, this can be a good level in case of an open high-low close profile. But if today will be an expansion day, right, and you come inside New York, say, and you're anticipating continuation, okay, because overall you're assuming that the daily profile is classic buy, then you can already anticipate that these levels will be used as a bullish breaker, right? So say if previous sessions leave fair value gap through these levels, although you're coming inside New York and this is technically still a premium level, but you can anticipate already in advance that is going to become discount. But again, this is only in case of an open low high close profile. Okay, now we can look at the 3-day look back. Right, so the 3-day look back is a current market maker sell model that we're trading in, right, from the expansion, original consolidation, price trades to the previous week's low, and so far, right, has found a rejection, right, a big down close candle that trades into it, followed by a change in the state of delivery. But overall, right, the range is choppy here, right? Although there's a change in state of delivery, but price at the current moment is still making, right, lower lows, lower highs. And so, for all it matters, this is simply a consolidation phase, and price will want to dig lower. But let's look at the key levels, right, to be able to determine that. Why would this happen, or why would an expansion happen? We can start from the 3-day look back. Okay, so what does this profile tell us? Well, first of all, it identifies, right, the profile of these last 3 days, which has been a swing to Z, right? So an expansion followed by a consolidation. Right, and price has traded the most amount of contracts in this range in discount. Okay, in fact, you can see it is very high resistance here. If we look at the previous day's range, okay, well, we can see right now price is trading inside of a dealing range. Right, what's the dealing range? The shakeout below the previous week's low, and the PM session highs from yesterday, right, which traded above the London highs, created divergence, and then came back in the range. So we're trading from a shakeout in premium, a shakeout in discount. Right, so the dealing range being this. Okay, what do we have inside of this range? Right, around the closure here, around the closure here of the previous day. There's obviously an expansion. Okay, you can identify that through the fair value gap, and the fair value gap cuts through the order block of the dealing range low, right? Which so far has traded it consolidated around the upper quadrant, trades to 50%, and now it's consolidating around the highs, okay, of this order block. So, right, these are very important levels here, especially this order block. Okay, say, and this order block is important because it comes from a shakeout, right, at a key liquidity pool, previous week's low, and has a fair value gap. Okay, so you want to see if price uses these PD arrays today as continuation or as inversion, especially the range of the bullish order block. Right, if today will be a bearish day, okay, say it doesn't need to, say even from these levels, okay, trades lower, but ideally it has some kind of shakeout, between the current Asia highs, or overall there's a relative equal highs here, and then starts trading lower. Well, you can anticipate that this down close candle will become a bearish breaker. Right, so either as an order block or as a bearish breaker. Now, because price is currently trading inside of it right now, it doesn't mean that New York, if say New York is at these levels, or I don't know, at these levels, right, doesn't mean that New York will have to trade back into it. But seeing what the previous session did around the range of this bullish order block, okay, that will give you good bias for New York. Right, if any fair value gaps are left through the range high, the dealing range high, the dealing range low, those are all, this is all important information coming inside New York. Okay, so I think that covers it. So overall, there's a bullish order block, dealing range low. My price currently trading inside of a dealing range. You want to see how the PD array is located inside of this dealing range, how they're respected or not. All right, fair value gap cutting through an order block. Do you come in the session and overnight displace the range lower, or do you come in the session and the overnight range has respected these levels and has displaced from these levels, right? Creating fair value gaps along the way, creating closure above range high, right? So keep these levels on your chart, and let's see what tomorrow gives.